key rate by 100 basis points to 9.5% per annum. This decision is based on a significant revision of the economic situation and its prospects. Contrary to our expectations, inflation trends have not reversed by the moment. Moreover, the steady components of inflation have even strengthened. The main reason behind this is increasing imbalances in the economy. Accordingly, we will need a tighter monetary policy than we assumed previously. We expect annual inflation to return to the 4% target no earlier than in the middle of next year. Making our decision, we considered the balance of risks for the economy and inflation just as we usually do. I will start out with the situation in the economy that has not only offset the slump of the pandemic period, but even notably exceeded a balanced growth path. We can see a stable rise in consumer and business activity. Russian companies' net profit nearly doubled as compared to pre-pandemic readings. Unemployment dropped to a new record low. These are impressive results, but there is a catch: high inflation. In the current conditions, it would be a mistake to believe that the observed economic growth is steady and balanced. High inflation is an indicator of an increasing overheating of the economy. If we take no measures to drive the economy back to a balanced growth path, its overheating will increase further and cause an uncontrollable acceleration of inflation and a subsequent slowdown of economic growth or even a recession. High inflation erodes all the benefits of economic growth for households, threatening their real incomes and savings, and thus worsening their living standards. An overheating of the economy is a consequence of intensifying demand and supply gaps. A lot of people can observe a recent surge in prices for housing, cars, and domestic tourism. These markets are the most vivid examples of possible consequences of soaring demand that exceeds the potential to ramp up supply. A deficit of components and logistics bottlenecks have become a serious challenge for enterprises during the pandemic period. Companies are gradually settling these problems, but it will take at least a year to eliminate them completely. Staff shortages are constraining output expansion increasingly more strongly. Unemployment has declined to its record low today, and companies will face difficulties hiring new employees to expand production. We consider this to be a more serious and longer-lasting challenge for a rise in supply than the persistent but still temporary logistics bottlenecks. In these conditions, cheap lending will not help ramp up output quickly, but will only continue to spur demand. Monetary policy can and should play its counter-cyclical role. In order to protect households, real incomes and savings against depreciation and create conditions for a healthier and steady economic growth, we need to address overheated excess demand. Excess demand is a surge in demand leading to a rise in prices rather than higher consumption. This is exactly why we continue the cycle of key rate rises. Given the monetary policy pursued, we forecast that GDP will grow by 2 to 3% this year. Its growth will equal 1.5 to 2.5% next year and return to 2 and 3% by the end of the forecast horizon, which we consider to be a steady rate. As regards inflation, prices surged over the past year and exceeded our inflation target 2 times. In January, annual inflation sped up even more. Temporary supply-side pro-inflationary factors have actually turned out to be longer-lasting. Global logistics bottlenecks have been hindering the imports of many goods for 2 years already. Prices for domestic tourism services continue to rise amid restrictions on foreign travel. transitory factors actually have the effect of steady ones, which has considerably affected households and businesses' inflation expectations. In recent months, they reached the highest level recorded since early 2016. There is even an opinion that the key rate increases do not contain price growth at all. However, if we had not started to raise the key rate last spring, inflation would have considerably exceeded 10% by the moment. Our key rate has prevented this, but the actual pressure of pro-inflationary factors has turned out to be stronger than we could have assumed. Considering the stronger inflationary pressure and the revision of the potential duration of temporary factors, we have increased and expanded the range of forecast inflation to 5 to 6% this year. Given the measures we're taking, we expect annual inflation to return to 4% by the middle of 2023. Now, speaking of monetary conditions, I can say that they are adjusting to the increased key rate more slowly than we expected due to higher inflation and inflation expectations. We have shifted from easy towards neutral conditions only now. Our today's decision will contribute to the shift towards tight monetary conditions. This will help limit the growth of long-term credit rates that significantly depend on inflation expected in the future and the inflation premium. The lower is the inflation rate included in these interest rates, the more affordable will be long-term loans. Lending growth has stopped to accelerate, but this is still insufficient today to have a notable impact on inflation. Moreover, lending expansion is largely driven by loans issued at reduced rates under various subsidized programs. Their terms are not very sensitive to monetary policy. On the contrary, the higher is inflation, the more attractive these programs become for borrowers. The portion of such loans in the overall bank portfolio expanded at least 2 times over the past 2 years, now approximating 10% according to our assessments. As the key rate has a weak impact on the demand for such loans, we need to maintain tighter conditions for all other borrowers who make up the majority. The key rate increase is influencing the trends in the deposit market slightly more actively than those in the credit market. Beginning from the middle of last year, households' propensity to save has edged up somewhat. However, this process is still slow, which is mostly associated with the simultaneous rise in inflation expectations. Another reason is that deposit rates are growing diversely across the banking sector. Accordingly, to ensure the required rise in average deposit rates, we also need a more considerable increase in the key rate. As regards risks, pro-inflationary ones prevail and have even become stronger. Firstly, disruptions in production and logistics chains may remain for a longer period. During the pandemic, restrictions and structural shifts in production chains entailed a temporary yet substantial rise in companies' costs. This is the so-called shock of higher costs that will gradually diminish, contributing to a slowdown of inflation. Our October forecast assumed that the impact of 40% of the transitory factors that had accumulated since the outbreak of the pandemic would abate in 2022. In our today's forecast, we lowered this estimate to 20%. Moreover, there is a probability that this process will be slower or that it will not change notably. This is a major pro-inflationary risk. Secondly, due to high inflation, many central banks are accelerating monetary policy tightening. Over the medium-term horizon, this will slow down inflation globally. However, in the short run, this might become a pro-inflationary factor for emerging markets. As regards external conditions, there is a probability of a further rise in prices for raw materials and energy commodities, as well as a range of other products, including food. Geopolitical risks have intensified as well. In order to mitigate all these external risks, the Bank of Russia might need a stronger monetary policy response, all else being equal. Thirdly, another factor raising our concerns is the situation in the labor market, namely increasing staff shortages. Companies' competition for labor resources will increase. This limits the pace and generally the potential of supply to quickly adjust to soaring demand. When labor costs rise, but labor productivity does not improve accordingly, this puts upward pressure on prices. Disinflationary risks are weak over the forecast horizon. I will now speak about our future decisions. I would like to remind you that we forecast inflation to equal 5 to 6% this year and return to its target in the middle of next year. I would like to stress straight away that this does not mean that we are less committed to our target. Are we able to bring inflation back to 4% by the end of this year? The answer is no if we want to avoid a recession. For this, we would need a shock increase in the key rate, which would threaten both the sustainability of economic growth and possibly financial stability. Furthermore, this would decrease inflation below the target next year. A balanced decision is gradual disinflation that will return inflation to the target without creating any risks for steady economic growth. According to our estimates, for monetary policy to be well balanced, the range of the average key rate should be from 9 to 11% per annum this year, and 7.5 to 9% per annum next year, and from 5 to 6% per annum in 2024. With this forecast, we cannot say for today that the cycle of key rate rises has completed. We hold open the prospect of further key rate increase at the upcoming meetings. We will closely monitor how quickly the steady components of inflation will slow down. Subsequent monetary policy normalization will largely depend on the pace of a decline in inflation expectations and a weakening of supply-side pro-inflationary factors. We will take further steps considering the incoming information, but today we tend to believe that the reduction in the key rate will be slower and take a longer period than its rise over the past year. Thank you for your attention, and now I will be ready to answer your questions. Elena Fabrichner, Reuters. What is the way that the central bank assesses the range of a neutral key rate at this point in time, and when it plans to restart its interventions into the currency market? And the next question, the lowering of a forecast of growth for 2023, is it the result of a greater toughening for 2022? Is it the cost of fighting inflation? So that was the question. So as far as the neutral rate is concerned, in the meantime, we haven't changed our assessment of the neutral rate. That is 1 to 2% in real terms, 5 to 6% nominally, but more probably, under the current circumstances that I have referred to, the short-term neutral rate is currently closer to the upper threshold. And of course, the neutral rate is being affected by what will be happening in the global economy and the way the neutral rate, the global neutral rate is going to evolve. Most probably it is also going to peak up, and the country premium. So I believe that in some time we will take a look at again at the neutral rate just to see whether it is necessary to review it, but we haven't done so just yet. And as far as restarting the purchasing of hard currency for the Ministry of Finance. We put this for some time on hold. We haven't yet made up our mind about when we shall start doing it again. We will certainly notify you of that in advance before we actually started. And so quite possibly, like the case was back in 2019, we first will regain our regular purchasing, and then we will start doing extra to compensate for what we estimate of the market environment, about the volatility and the liquidity. And once again, would like to emphasize that is not going to be dependent upon any sort of an exchange rate at any given point in time. And in as far as our outlook for the GDP is concerned, for the whole of the forecast period, there have been several factors at play. First, the actual growth within 2021 turned out to be above what we had expected, above our upper threshold of our range. The upper range threshold that we forecast in October was 4.5. Now we see it at 4.7. And if you take a look at the forecast changes in October and now, effectively the level of GDP by 2023, if you add up 21st, 22 and 2023, in terms of the previous forecast, it looks approximately the same. So we anticipate that in 2023, we will go back to a balanced growth path. It's just that it's going to be slightly different due to the fact that in 2021, we believe that we were much above the trend. Next question, please. Rita Shpilevskaya from TASS agency. Good afternoon. Yes, good afternoon. I've got two questions. My first question, when in this year one could expect the reduction of the price pressure? How is it being felt by the regulator? Can it happen in the first half of the year? And do you expect any short-term spikes in inflation in the foreseeable future? And has the central bank changed its views about the alternative scenarios of the economic development as opposed to what we've heard previously? Thank you. All right, I shall begin with the second question, alternative scenarios. No, we haven't revised them. We do it once a year when we discuss the main guidelines of the monetary policy, and we're going to do that closer to the autumn when we will relaunch our monetary policy guidelines discussion. As far as the pricing pressure is concerned and whereabouts as to it. Indeed, we expected that first in the Q4, the inflation would start slowing down, and then in the beginning of this year. So in the meantime, we're not able to say that this slowdown is taking place, but you can't either say that it is becoming faster or it is slowed down, so it's revolving around the peak values. And so this monthly slowdown we will see in the first half of 2022, and gradually towards the end of the year, this year, in seasonally compensated way, the current price level will nudge closer to our target level. But of course, there are so many uncertainties, and we particularly note that we can't understand how the cost shock is going to impact everything. Certainly it would influence inflation, but the inflation is going to be also affected by the inflation expectations, so we're going to monitor that. A lot of uncertainties, but nevertheless, I would like to underscore that our monetary policy is specifically aimed at slowing the inflation down and bring it back to our target level. Anastasia Savelova, Interfax. Good afternoon. Yes, good afternoon. What were the decisions that the board of directors considered today on the rate? Because I presume there were different ones. And did you consider the non-conventional 150 basis points rise? And second question, Sergei Shvetsov was proposed to be entered into the Board of Trustees of Bank. Does it mean that the central bank is not going to be represented on the Board of Trustees of Bank? And what is the reason behind this decision? Is Sergei Mikhailovich is not planning to leave the central bank's position? In as far as the decisions are concerned that we were reviewing, we didn't review a broad number of them. We substantively looked into two options to rise the rates by 100 and 150 basis points. Eventually, we went for 100 basis points, bearing in mind the fact that there are so many uncertainties, and also in order to maintain flexibility and the monetary response to the changing circumstances based upon the data being gathered. But we very thoroughly considered these two options indeed. Now, in as far as different HR decisions are concerned, we usually announce them once they are done, and Sergei Shvetsov is going to represent Central Bank on the Board of Trustees, on the Board of Directors of Sberbank. Sber. Anton Feinberg, RBK, good afternoon. Yeah, good afternoon. In your introductory word, you mentioned several times overheating of the economy phrase. Is it true to say that, as deemed by the central bank, the main reason behind the high inflation was overheating, or the Russian economy, rather than the imported inflation or the soft monetary policy? And at what point in time the Russian economy slid into this state? And should this be considered as the toughening? I mean to say, is there a greater chance now for further tightening of the policy, specifically, and again, by 1 or maybe 1.5 upwards in May again? And another question, if I may. In the central bank release, there is a wording of a short-term inflationary risk growing stronger because of the volatility and geopolitical circumstances. Could you assess what kind of a contribution the current geopolitical tension makes into it and into the central bank's decision on rate, through which channels that happens, and to what extent the high inflation, which sustains despite the tightening of the policy, is related to the geopolitics? Thank you. Thank you very much for your questions. Quite a few questions, I dare say. Let's start with the overheating one. This country's economy has recovered very quickly. I mean, the decline, which happened during the pandemic, it had been overcome quickly. And in order for no overheating to take place afterwards, it was important for the economy to grow at the pace close to the potential. But it continued growing at the pace which was higher than the potential. And amongst other things, one of the indications which points to that is inflation. And the second one is the labor market. Now, to what extent the imported inflation impacts internal one? Well, you know, if the imported inflation were not to translate itself into the inflationary expectations and into the ability on the part of the corporates, I mean, thanks to due to the high inflation, which was stronger than the demand, higher than the supply. Otherwise, yeah, we would have said then that the imported inflation is a temporary factor, and you don't have to really try and fight it through the monetary policy. But the imported inflation through the inflationary expectations channel, as well as because of the fact that our demand is stronger than the demand, that is the indication of the domestic demand, and that means that it turns itself into a stable factor. So somehow to separate these factors in a correct way is not an easy way, but we will do that sometime in April because we do such an analysis reviewing the year-end results. Now, as far as tightening of the monetary policy is concerned, despite the fact that we have been raising the rate, and we have risen it last year, we rose it last year by 425 basis points, the monetary conditions remained soft because the inflation grew and the inflation expectations followed suit. And because of the fact of us raising it, maybe the level of softness of that was going down. So our analysis shows that we have moved only into the neutral rate range. And the indication of that is the lending dynamics. The lending last year was stable and even growing quite actively. And in order to lower inflation, you need to temporarily move into the zone of tough monetary policy measures. And of course, there being any space for an additional key rate rise much more important as opposed to what we were able to know during the last Board of Directors meeting. But the way this whole environment materializes shall depend upon multiple conditions that entail uncertainties, and we will assess that at every Board of Directors meeting. Now, with regards to geopolitics, well, geopolitics impacts the country premium. We noted that the sovereign bonds responded to this geopolitical premium. In many ways, they also affect respective interest rates, so the channel of such an impact is there. And when we were making our decision about the key rate, we certainly took these risks into account as one of the elements of external influence, because the external risks are diverse, but one of the factors is specifically this one. Thank you. Now, next question comes from Andrei Burikov, Bloomberg, please. Good afternoon, Elvira Sahibzadovna. This is the second rate rise by 100 basis points in a row. Does it mean that for the current environment, this is a normal step, and that in March you would also think about 100 basis points? Another question I would like to ask you about the central bank's purchasing of the currency. What kind of a time frame we're talking within which you would start doing it again? And how long the exchange rate should stay at the same level for you to come back actively into this? What regards the step, the current situation may change very quickly in different directions, as they say. It's even difficult to define what is a standard step, but let me put it to you this way. Under the current circumstances, 100 basis points is less of an unconventional step compared to what we believed in the past. And quite possibly, this kind of a measure of a step we would need to do again, because I would like to emphasize that today we consider not only 100 basis points, but also 150. As far as restarting our hard currency purchasing, you asked how long the stable exchange rate should remain. Let me say it again. It does not depend upon the exchange rate per se or its fluctuations. It depends upon our overall assessment of the volatility of the market, which is defined not only by the volatility of the exchange rate, the depth of the volatility, and the premium. So what we come from is that the delayed purchasing will certainly stretch within a certain period of time, but which exactly period of time? We will do that in order to produce the least impact upon the market dynamics within a short-term period as the minimum. Yes, we will stretch it out for a certain period, and so we will give it a thought, and that will all depend upon how lengthy this period of us refraining from it will be, and what kind of resources will be accumulated as a result of it, so as to give it a comprehensive assessment. And I also want to say, of course, whenever we reviewed our forecast, one of the prerequisites to it was the dynamics of the way the delayed purchasing is going to be done, and so we decided that we will work on until the end of the 2023. But this is just a model-based prerequisites. The decision may be standing apart from it, but at least that is the way we are perceiving these dynamics. Next question comes from Anastasia Saprikina from RIA Novosti. Inflation in Russia continues to speed up and has been speeding up for several months. When central bank expects inflation to reach its peak, and at what level it might manifest itself? The inflation peak, well, speaking about monthly values, I mean seasonally compensated one, we've passed the peak. It took place in October. Now, speaking about the annual values, which statistically account for the price growth over the previous 12 months, then we are at the peak levels right now. We do not expect any dramatic speeding of a certain surprising kind of a quality that could be described as such, but just yet there's no pivoting taking place towards the situation where we can say that there is a definite slowdown trend. So we are somewhere close to the peak values, and we expect such a slowdown towards the end of Q1, sometimes throughout Q2. But you may talk about the trend a bit later when we definitely see that it is a stable thing. Dmitry Butrin from Kommersant, good afternoon. Good afternoon. I see that almost everybody is asking the same question, so let me try and rephrase that. In the autumn, in the monetary policy report, you defined several scenarios, and the way they would deviate from the base one. Whereas now you are saying that the inflation outside of the base scenarios, and generally speaking, the events are unfolding outside of it. So within which particular point in this scenario we are currently are positioned? There were several options: long-term inflation, temporary inflation, and the second question is almost the same. If the central bank insists that the balanced rate is somewhere at 5 to 6% per annum, we're currently having it at 9.5. So what is the way that is the relationship between the neutrality, the balanced status of the rate and the monetary policy, and against which particular rate, if everything stays as is, you would describe it as a tightened one? How do you define that? Thank you. Well, it is true that our tree of scenarios, and we're preparing that to put into the main guidelines of the monetary policy. But then at one of the core board of directors, we specify our base scenarios. The base scenarios is more fluid than others. And such scenarios we do review and revise once a year. But speaking about the way the base scenarios and where is it closer to the global inflation scenario, or the risk scenario or disinflationary scenario? I would say that we've flown over the framework of the global inflation. So I would say that the base scenario is closer to that one. Now, as far as the level of tightness is concerned, or the neutral policy, well, first you said to insist that the neutral rate is 5 to 6%. No, I said that at this point in time we haven't revised the neutral range 5 to 6. It may get shifted under the changing country premium, and because of the global rates, neutral range is also being revised. And so what we're saying is that it may get shifted above that, the neutral range, as we're saying. But it's a conditional value. It's not based on our gut feeling. You know, we are describing it based on our modeling. And this neutral rate enables one to support the level of inflation at about 4% when inflation is at 4%. But when inflation is above 4%, it is important for the rate to be above the neutral one, for there to be a certain level of tightness within that rate. And this level of deviation from the neutral rate should be greater. The greater inflation deviates from the target, and the longer it takes, because that creates inflationary expectations. Right now, inflation deviates from the target by almost twice. And it is important to us for the real rates to be positive, and we will assess the level of sufficiency in the tightness of the monetary policy, not based upon the extent to which the level of the real rates in deposits or the loans is above the neutral one, but based upon a whole array of indicators, the economic dynamics, the lending activity, as well as the propensity to save and deposit, everything that impacts the savings behavior and consumption of households and businesses, which defines inflation. This is all is described as a transmission mechanism. So you can't formally say that if the actual rate is above the neutral one by that much, that will guarantee us 4%. This is the analysis which ensues from all of this process, and that is the action of the whole of the transmission mechanism. I shall remind you that it acts with a lag, because many are saying that once the key rate is raised, no, the inflation should go down. No, that doesn't happen, because it's the mechanism that is delayed in time, so you need to live through several quarters in order for it to manifest itself. And so we expect the fullest cumulative effect from our decisions of tightening the monetary policy, that it will be also tested in the second half of the year and would demonstrate itself throughout the next year as well, because of such a lag effect. The next question comes from Elena Nikolacheva, St. Petersburg TV channel, please. Good afternoon. On more than one occasion, and also today, you were saying that inflation growth, amongst other reasons, because the demand runs ahead of the supply, and the producers have to raise prices in order to limit the demand, be it in the automobile market or real estate. But the consumers find themselves in a bit of a trap, because prices are growing and the households don't understand what are they to do. And in order to avoid their money values falling, they just start poaching. What you should do in order not to speed up the inflation under such circumstances? A very good question. Thank you very much. Well, first of all, the manufacturers, it's not that they're forced to increase prices, because they have the capacity to increase pricing when the level of demand exceeds the production capacities. And if we, for example, look not only at an individual manufacturer's capacity, but a whole array of the producers which produce the same product, and they can increase the prices without being afraid that they will lose their market share, that consumers will go to other producers because their overall ability to increase the sales is restricted. But you are noting quite correctly, if consumers are afraid to lose their money severely because of the future price growth, that in effect means higher inflation expectations. People are afraid that the prices would grow, and they're afraid to lose their money because of such a price growth. And certainly, under such circumstances, people are ready to pay a higher price right now, as long as they can buy it right here and now. And that is exactly the kind of an excessive demand for you, which doesn't create additional consumption. It doesn't create the possibility for an additional production to grow. It only transforms itself into the price growth, and that's what was described as an excessive demand that we're observing currently. So effectively, if we take a general economic look at it, then the consumers compete against each other for an available supply, and the prices would grow by exactly the kind of margin in order for supply to equal demand. It can't happen otherwise. If there is a disbalance like that, then the prices will grow. But alongside with that, it is totally erroneous to say that people are intentionally speeding up inflation. Consumers, under the high inflation situation, with high inflation expectations, behave very logically. So in order to curb inflation, you need to eliminate this overhang of an excessive demand which creates this inflationary pressure, and this can be done primarily to make the savings behavior for consumers more attractive. When people are no longer afraid to save, so that means higher deposit interest rates. So that even people expect a higher inflation, they will still be aware that the deposit rates being offered won't cannibalize their capacity to save and feel effective. This is one of the channels that the monetary impacts the economy. And that is why exactly we're currently raising our key rate, and we shall continue doing so until the households feel, like the case was several years ago, that the deposit rates are able to compensate their inflationary risks in full. And what will happen then? This excessive demand, it will transform itself into additional savings, which, by the way, will enhance the long-term lending for the corporate sector, and the inflation will start slowing down and we'll go back to our target. Next question, Anna Kaledina from Izvestia. Why can't you change the target, bearing in mind the new reality related to the pandemic and geopolitics? Well, you know, our attitude towards changing the target, we've as far as I understand, what you mean by it is that raising the target rather than lowering it down to where you can see it in many countries, even in the developed economies. In the majority of the countries, it is less than 4% amongst those who are targeting inflation. And in our view, this shouldn't be done because in our conditions, and this is something that we observe currently, the inflation above a certain level, about 4%, it creates a negative impact overall upon the economics and upon the incentivization to invest longer term and long-term savings. And to be honest, it reminds me, I mean, you can't, move the gates from where they are. So the consistency of the target, principally important, particularly when there is such a strong uncertainty, and that is one of the anchors in the policy. Next questions comes from Artur Arutюna from Forbes. Good afternoon. Good afternoon, Elvira Nabiullina. I have one question. Towards the end of last year, you said that you don't see the kind of a scenario where the rate would grow to double-digit levels. So it has edged to this particular level very, very closely. Clearly, the situation has changed. Can you give us a bit of a guideline in terms of what you see as the peak of the key rate and when it may happen? Another question, have you arrived at a certain consensus with the government about regulation of cryptocurrencies? Pavel, thank you very much. Indeed, we have changed our vision as to the key rate path compared to last year's. And I specifically began by saying that we have considerably altered our vision of the situation and its future. And our inflation forecast, as you may have seen, is where we changed our key rate forecast for this year. We are coming out with an average annual one being in between 9 to 11%. So the average annual rate may reach a double-digit value. The average annual one doesn't mean it's a big one because we're not giving our guidelines in terms of the minimum and maximum. And we believe this is correct because overall the economic activity and the market players are being impacted primarily by the average annual rate. As far as your next question is concerned about cryptocurrencies, you know that we have announced our position in the form of an advisory report for public debate, and we welcome the fact that the government also came out with a document, conceptual document about its position, which makes the further discussion more transparent and easily comprehensible for the public. But what's notable is that the government hasn't discussed its concept with the Bank of Russia before its publication, and so it is still awaiting. You know that we see meaningful threats in developing in the expansion of the cryptocurrency market, both for the households, for the monetary processes, for the financial stability. We see the risks that the use of cryptocurrencies is wrought with in terms of illegal transactions. The concept from the government points to certain benefits there, but we are somewhat are doubtful about it, but more doubtful we are that the risks that we are pointing to, the Minister of Finance concept doesn't reflect upon. So no thoughts about mitigating them. So we submitted our position about the Minister of Finance concept to the Cabinet, and the main outcome, the main conclusion, is that the approaches proposed by the government in the meantime doesn't enable us to eliminate the risks that we see while simultaneously creating new threats. You know, one of the main issues here is that we have already a high level of households' involvement into this market, and so it requires legalization. Well, I would say it seems to me the fact that our citizens are very much engaged in this market really means that we should speed up in terms of making up our mind and making a decision, because these risks are material. I mean, if we were to say that, these risks are minuscule, no, we need to do everything possible to reduce that risk, because the risk of such an involvement in this market is quite high based on the international yardstick. And so the question is, do we want more people to be in it or less people? The Minister of Finance is saying there should be more of them. We're saying it should be less of them. I can give an example of the hard currency mortgage, because people eagerly took the hard currency denominated mortgage loans without understanding the kind of risks that they were taking on. And of course, after the whole thing happened, the question was raised why it was not prohibited at all. And those problems then had to be dealt with both by the government and the central banks, and a lot fell upon the shoulders of the commercial banks. But the scale of that problem was much smaller than the cryptocurrencies one, and this has to be taken into account. As long as nobody says what one should do with these risks that are obviously existing, that is a big issue. And also, with regard to the cryptocurrency issue, I would like to draw attention to another problem that is important to us as the central bank. For many years we've been combating illegal transactions in the financial sector. We were trying to take out of the market the players who were systemically involved in laundering. While the cryptocurrency, based on its nature, will open up a large-scale channel for such transactions. There's going to be a new spiral. Also, we hear that there are proposals to have the Russian banking sector playing part of it. This is a new spiral of having our financial institutions being swept into it. And so some are saying that legalizing cryptocurrencies will create a better tax intake by the government, but without bearing in mind the fact that along with the illegal transactions, and many cryptocurrencies are very easily servicing such illegal transactions, there would be a leeway for tax evasion in the economy. You have to bear it in mind as well. So there are so many issues. And so indeed, the government concept has been published, and our report for the public debate also has been released. And so I hope that we will have a constructive discussion which the public will be able to see and hear, and so that everybody could come forward with their arguments. Thank you. Next question from Tatiana Frank. Good afternoon. I also have two questions. The first one is about hard currency mortgage. Well, the fact of the matter is that despite the availability of the subsidized programs, most of the banks issue loans based on market rates, and the current range of rates under such programs currently is from 10.5 to 12%. And if the borrower doesn't buy the life assurance, it could be from 12 to 14. As we understand, this level doesn't take into account your today's decision. Quite obviously, that won't allow banks to support the kind of pace of the mortgage market growth that we've observed over the past 2 years. So it would be interesting to find out what's your forecast for the mortgage loan market, how it will evolve within the next 2 years. We also saw the way the divestiture from the Russian assets slows down the M&A activity in the market, because unfortunately it led to the overvaluation of such assets. With the spring of 2022, you had certain hopes related to it to sell your stock in the Odkrytie, the Discovery Bank. Back in November, we remember that the applications from potential investors were being collected. Besides, you were saying that you believe that IPO is one of the good ways to go forward with such a divestiture. Now the question, compared to what we saw in January, is the central bank ready to reconsider the timing and the options that you would resort to sell your stock in Discovery? All right, thank you for your question. Indeed, the mortgage rates have slightly grown, but much lower compared to what was about our raising the key rate. Make a note of it. In terms of the market rate, a little bit more, but in terms of the key rate, less than that. And the mortgage lending activity is going at a very high speed. Without doubt, there are certain concealed payments, including in insurance part of it. We made our proposals known how to change that system because people can see how the mortgage rate really can turn out to be much higher because of the forced insurance at some higher rates. We had a consent, and hopefully we will be able to discuss it with the government so that using this particular part of it, the overall level of the cost, of full cost of the borrowings that these insurance payments should be made part of could come down. Now, the mortgage activity currently is not balanced, and such a pace of its development used to be one of the key reasons behind the real estate prices spiraling up, and they should be lower than that. And the subsidized programs would be more customized. We'll give up on, sort of the blanket kind of mortgage offerings to very specifically customized, and that may establish the balance. Now, in terms of 2021, the mortgage housing loan grew almost by 27 percentage points. That was a very high level of pace. In 2022, we would expect it to be about 15 to 19, in 2023, 14 to 17, and onwards, 12 to 16 in terms of the mortgage rate lending growing. But that nevertheless signifies a high pace of growth, but nevertheless more balanced, and that will create a greater number of individuals to resort to this particular instrument without accumulating risks for themselves nor for the system. Now, and as far as Открытие, the Discovery Bank, is concerned, yes, it is true that we are currently getting ready. We are preparing to sell it. Our strategic goal is to get rid of the Открытie's share stocks. We have received several offerings from interested strategic investors and their intention to participate in this procedure. The deal in itself is quite complex, it's quite sizable, and so we need time in order to study all of the proposals we've received in detail and compare them to the means that we believe is most promising, which is the public offering. Public offering remains as one of the possible options in our divestiture strategy. We certainly do take into account the overall market environment because that would define the price at which we will be eager to sell Открытие. Next question comes from Ilya Averin from the Khabarovsk News. Yes, thank you. Good afternoon. I would like to carry on the topic of the mortgage, but in the regional sense. You see, in the Far East, we have subsidized programs. For example, the Far Eastern mortgage program, where the interest rates today starts from 0.9% per annum, which definitely go to the number of transactions soaring, but also that led to an unprecedented price increase for a square meter. Now, does the central bank have any real tool in order to maintain the balance between the demand and supply, but so as to avoid the housing becoming so expansive? Well, on the one hand, this is, you see, the basic thing that we're talking about is the availability of housing to the people so that there would be more opportunities against the current income level for people to buy housing, to buy the square meters, which is definitely being affected by the cost of a loan, but not less. Even greater impact comes from the housing prices. So these factors need to be considered as a whole, because sometimes it seems that the rate has gone down, but at exactly the same time, the availability may shrink if prices shot up much more considerably, eliminating all the effect from the reduced rates. Now, what kind of central bank tools may provide for the availability of mortgage lending, which through itself provides the availability of housing? To start with, I should say that the cost of long-term loans and mortgage loans are in the category of long-term lending. Their value is being affected not by the key rate, but by the long-term bond yield, because the key rate does affect short money, the current liquidity that the banks are able to get. as well as the deposit rates in the banks, while the long-term rates are rather defined by the expectations and the bank's expectation as to what kind of inflation there will be and what kind of a country risks we will see. And so our policy, which is related to the key rate being risen and the short money becoming more expensive, is aimed at supporting at the low level the inflation and a moderate level of long-term rates. And we see that the long-term rates, nevertheless, are changing not as frequently under the key rate influence if there is a trust in the central bank's ability to bring inflation back to the target. And we can see it through the past 2 years. Like I said, the key rate, our key rate, it grew by 425 basis points, 4.25%, while the average mortgage rate, if you look at it from the minimum, it grew by less than 1 percentage point, 0.8. Of course, there are subsidized programs within it, but even if you take out of it the subsidized mortgage programs, then the mortgage rate in the secondary housing market nevertheless grew much lower than the key one by 2 percentage points. And of course, one can't agree that the mortgage lending becoming more expensive pushes the prices upwards. Like I was saying, if it's about housing prices, it's exactly the opposite. And we saw this correlation last year. The lower the mortgage rate, the more available is a mortgage loan, which is not securitized by the fact that the housing prices grow adequately. That doesn't bring the reduction in the housing pricing, but the reverse of it. And the past year demonstrated this to us quite vividly. And so by tightening our monetary policy, we definitely won't bring about an additional housing price increase. On the contrary, it will deter the housing price growth, and that will facilitate the availability of housing itself. The next question comes from Alexei Ankudinov, government television radio channel from Kaliningrad. Should one expect further growth in the mortgage rate and how that might impact the real estate market? Should those who are planning to buy housing really speed up things? You know, I have already been referring to the mortgage rate. Our policy is aimed at making the long-term rates to make them more available, more moderate, and not to try and follow in the wake of inflation. And so it is important to make the monetary policy decisions in such a way so that the whole market will see that the inflation will be cushioned and will go back to the target. And that is why we come from such an awareness, and i.e. gradually after the period of tightening the monetary policy, which is related to the growth of the nominal rates in the economy, we will go back to the neutral range, to the key rate, and respectively the long-term rates will be moderate and stable. But from the point of view of buying housing, you need to really take a thorough look whether you should do it now or delay it and do it later, or maybe you should keep your money in a bank deposit or use them to buy housing and get some loan additionally to which you will have to pay interest. And again, I shall underscore, like during this particular exercise, you need to take into account the fact that the central bank does everything in order to make the rates go down. And as the inflation rivets back to the target level, that target is much lower than the current inflation. The next question comes from Anastasia Alexievsky of Gazeta RU. Good afternoon, dear Elvira Sahibzadovna. Good afternoon, dear colleagues. I've got two questions. Does the central bank observe this year the share of the consumer loans amongst the borrowers with a high debt burden? In October 2021, their share was 21%. So how is it looking now? Is it higher or lower? And what's the amount of such loans that the central bank considers? And the Sychov's leaving, Mr. Sychov leaving Central Bank, is it related to the Suchkov's case? Well, on the second question, it's completely unrelated. Now, first question, and as far as the high-risk loans is concerned, with more than 80% debt burden, I don't have the recent data at my fingertips. We will be analyzing, but looking at the October-November is too premature to make anything based on that, because specifically in January, we have another set of macroprudential markups coming into effect, and so we need some time to take a look at how it all is moving and to assess the sufficiency of these measures, because whatever we've been able to see before January, regrettably, the share of such negative loans have been growing. Now, the extent to which the current January measures are going to be sufficient is what we need to look into. We are getting ready. We're doing everything we can so that as of June 1st to introduce macroprudential limitations, so as to make sure that this share of potentially distressed and problematic loans with high debt burden would not grow. Next questions, Ekaterina Litova from Vedomosti. To what extent the deposit rates among the commercial banks should grow in order to provide for sufficient improvement in the propensity to save? Well, you can't be talking about any specific level of a nominal rate or what it should be, since it is dependent not only upon the current inflation, not only upon our inflation forecast, but what kind of inflation expectations you find amongst the household who compare the deposit rates within 12 months based on their inflation expectations, which are quite high right now. And so we do observe that over the past months they have gone slightly down, but they still remain significantly high, which prevents the deposit rates, from the point of view of their behavior, to be considered being in the positive range. And so the level of such rates is insufficient right now in the deposit category in order for the deposit rates to be attractive, sufficiently attractive. Although we do see, like I previously mentioned, we do see a certain positive dynamics in terms of the current deposits, because their quantity is growing. Since last year, there occurred a very dramatic change in favor of the current accounts, where we remember there were either minimum rates or zero rates. So currently there is a bit of a flow back into the current deposits, and so it is very important for us for this trend to sustain. And so what we act upon is that, considering today's decisions, this trend should further be around. Ivan Shligin from Formagrey. Elvira Nabiullina, good afternoon. Two quick questions. Specifically, a lot has been mentioned about the mortgage, but the topic without the original contribution, the original deposit, wasn't touched upon. Is it good or is it bad in terms of the mortgage bubble being blown further up? Now, the second question about the high oil prices. High oil prices that we are seeing, which is about $90 per barrel, is it good or is it bad in terms of inflation and other factors? Thank you. Thank you. Now, as far as mortgage is concerned, well, the mortgage without the original deposit definitely is not a good thing, because it is not just a bad thing, it's very, very bad, because this, in many ways, something which provoked financial crisis in U.S. in 2007, when mortgage loans were being given to people without any savings, because the ability to save money for a down deposit is a good indicator, which can be proven statistically. This is the thing, showing that an individual is able to service such a loan, that he's got enough income to take such a loan. We've got very few loans like that in the banking system. without the down payment, less than 1% as far as I can recall. But what's important is that the original deposit, even the low level of it, as long as it's there, it can create such problems. And so correlation to the default is quite strong. So our system macroprudential markups is specifically fine-tuned to de-incentivize banks to issue loans with a low down payment. Now, as far as the high oil prices are concerned, short term, that through the currency channel could become disinflationary, although the fiscal rule extracts quite a sizable share of such an effect, but some part of currency returns remain in the economy. But overall, mid-term as well as long-term, that is a pro-inflationary factor. And that's exactly what we take into account whenever we put together our base forecast, wherein throughout the whole of the forecast time frame we have raised our assessment of the oil price dynamics by $5 per barrel. And so, generally speaking, exactly like all of the commodity prices, them growing as far as our economy is concerned, that is pro-inflationary. Tatiana Chubaisova, Interfax, good afternoon. Good afternoon. I've got two questions. One is a bit global. 2022 is quite a definitive one because on January 24th, your authority in the position of the central bank governor finishes, and as we expect, before that, the president must submit his candidate for be approved by the parliament. Has anybody discussed with you your third tenure and the cabinet reshuffles that took place in January? Is it somehow related to your plans to keep remaining the governor of the central bank for another 5 years? My second question is about cryptocurrency topic. In case the government concept prevails and a certain legalization of cryptocurrencies happen, what central bank will do? Will it accept it, or do you have a plan B? Well, as far as central bank reshuffling is concerned, it is unrelated to my plans. I don't want to comment on myself personally, but as far as the cryptocurrencies are concerned and accepting the MinFin concept, well, we will do our level best in order to convince the government and give an even better detailed story about our arguments, because we do see considerable risks here, and so I'm very much hoping upon common sense taking the upper hand, so we don't have any plan B yet. Well, it's about time we finish. Thank you very much for your attention, for your questions, and have a good day. Thank you.